continue to remain in focus, but to understand what the outlook is going forward and whether the momentum is sustainable, we now have Peter McQuire, CEO at AustraliaTrading.com, now joining us. Peter, afternoon, and thank you so much for taking your time and joining us here on ET Now. And first up, let's start with the precious metals basket then, and silver in particular. It has now crossed that $57 per ounce mark in the global market. What do you make of the up move in the silver market, which is led by supply crunch? Do you think this is transient and perhaps not going to last, at least in the near term?
Well, good afternoon, Ashisha, and greetings from Sydney. Good to see you. I tell you what, if we look at last week, and last week was such an interesting week across all of the precious metals, and on Friday we were up 6.2 or 6.3% for silver on COMEX, and naturally, all-time high. And I made a call going back about Thursday. I said I wouldn't be surprised sometime through that December month that we'll see $60. I'm sticking that flag in the sand right now because I think we will see $60 this month. It's 30 days until the end of the month, and the momentum has just been extraordinary. 90% up for the year, and you've got a big percentage of probability as far as a rate cut. It's risk on at the moment. So yeah, I think silver is going to actually tear this month.
You're saying that silver will touch 60 by the end of this month. Then what about gold? Do you expect gold to then underperform as compared to silver over the next 30-day period?
Well, yes, it's underperformed considering its little brother. Silver has been the standout this year, nothing short of incredible. And the way it's going, it'll probably be up 100% for the year. Gold, I think, will probably take, put another 100 or 200 on over this calendar month because of that big probability. And let's just unpack this a fraction. 10 days ago, it was a 20% probability of a rate cut for the Fed. Now that's jumped to 85%, and the way it's moving, it's nearly a 90% probability that you're going to see a rate cut. So that's really, I think, going to add so much momentum to equity markets and to precious metals in the short run. I think it's going to be a Santa Claus rally.
Okay, so you're expecting a Santa Claus rally as far as the precious metals market is concerned, but let's also talk about industrial metals then. Copper is also trading at a fresh record high on London Metal Exchange. What do you make of this move as far as copper is concerned?
Well, we wanted to get through 11,000. That was with conviction, and it's closed above 11 with a lot of conviction. So that tells me that the way it's looking, I think we're going to be looking, the target's got to be 11,500 a metric ton. It's also taken its big brother up, which is tin. Tin's now at 39,000 a metric ton. So all of the industrial metals are on quite a strong move. I'm talking zinc. Have a look at aluminium. So things are moving upwards in lockstep, and I feel as though that this will continue over this month. So I think December is going to be a good month naturally for industrial metals, precious metals, and quite probably equity markets.
Right. And since you're telling us that you're bullish on most industrial metals, tin, aluminium, can you take us through the target price that you have set for all these industrial metals?
I want to see 11,500 to say 11,600 for copper, and it's got to be how quickly and the momentum and the acceleration to get us to that sort of number. If it's taken with gusto and there's a lot of, I think, strong points of really pushing price up and strong incentive and sentiment, then I think that, that's got to be a 12,000 handle. But let's get to 11,600 first. As far as aluminium and zinc, I want to see that 3,200, 3,300 sort of number. And for tin, I want to see 40,000 and probably 40,500. If it gets to that sort of number by the Fed rate cut on the 11th, then that really tells me that we're in for some exciting times for the back end of December leading into Christmas.
All right, so $3,200 per ton, that's the target for aluminium, 40,000 for tin, and you're saying that copper could cross 11,500. Let's shift focus from industrial metals now to the oil market then, and we got OPEC Plus decision, which was largely in line with what Street was penciling in. What course do you expect OPEC Plus to take when it meets next in the next month? What kind of action do you now expect from OPEC Plus?
I want to see, naturally, they're going to be very considerate as far as rate cut. They want to look at inflation. They want to see where China's positioned. And they want to see global demand. So there's a lot of moving parts to all of that, and we can't discount Venezuela and the situation with the Trump administration there at the moment from a geopolitical stance. So that's their works in progress, and how that unwinds, no one knows. This is very unusual. So let's take that on board. I think that prices will be softer leading into the first quarter. I'm still calling 55 for WTI, probably sub 59 for Brent. I think that glut is going to materialize, and the overall theme, we're in a very, very large pullback we've seen this year as far as crude prices, and I think that will continue leading into first and second quarter of 26.
And you're telling us that Brent prices touch $55 per barrel on the lower side, right? Am I getting it right?
No, I'm saying that for WTI, I'm looking at 58.50 for Brent. But let's get there, and I wouldn't be surprised for that to materialise by mid-February, and then let's see where we are rolling into Easter. But yeah, I think it's going to be very much softer prices, and it's a time to be short for energy, continue to be.
That's the outlook when it comes to the oil market. Peter, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the outlook is, not only when it comes to industrial metals, but also about oil and the precious metals basket. Thank you so much for joining us today. But let's shift focus and let's also talk about cryptocurrency, because that continues to remain under pressure today. We'll put the spotlight on the kind of moves that we have seen on a year-to-date basis. Bitcoin today is now trading near that $86,000 on the global market. This is much lower than the $1,10,000 mark that we have seen a few months ago. Let's also talk about the kind of moves that we have seen on a year-to-date basis and over the last 1 month. Bitcoin, for instance, is down 5% today. It is down nearly 21% over the last 1 month, and on a year-to-date basis, it is down nearly 8.5%. Remember, January was when US President Donald Trump was elected, and back then we had seen a lot of euphoria around US government support for cryptocurrencies, and that is the reason we had seen solid uptick in the cryptocurrency market. But after that, it has only faded, and now over the last 6 months, Bitcoin is down nearly 17%. It's not just the case with Bitcoin. Let's also talk about Ether then. That one is down 27% over the last 1 month, and on a year-to-date basis, it has fallen nearly 16%. So clearly, we are seeing a carnage across all cryptocurrencies. Bitcoin being down 8%, and it's not just cryptocurrency, right? Across the board, across asset classes, we have seen quite a bit of pressure, and that continues to weigh heavy on several other asset classes, including the crypto market. But that's all the time we have on this edition of the show. Thanks so much for tuning in. More news and updates will come up on the other side.